The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we wrapped up the first week of trading on Friday for 2024, not a great day. Corn and soybeans, wheat, hogs found a little bit of green. Cattle turned lower, though, too. So not a great showing to round out Friday's session. But we got plenty in front of us, including a pretty big WASDE report here next week from USDA. We're going to talk about that and just get some perspective on how the markets wrapped up the first week of trading in 2024. Joining us for a conversation, Dwayne Bussey with Bolt Marketing is with us. Dwayne, Happy New Year to you, my friend. Thanks for joining us on the show today. How are you?
Yeah, I'm doing well. Happy New Year to you and the listeners out there. And I wish the markets were a little better this week for us, but it's what we got in front of us, I guess.
Yeah, it's what we got in front of us. It's just the hand we've been dealt here, and part of me wonders maybe even too, some folks were still kind of on a vacation, so to speak, here, even with the new year starting, because these markets, outside of a few different things, been fairly quiet this week. I know Tuesday was kind of our busy day with that first trading day of the new year, but really grains and livestock have been kind of range bound-ish here this week to some degree.
Yeah, and I think a little bit of that is the time of year too, right? It's not like we're watching the U.S. weather that much. Now, there is a storm coming that we can talk about a little bit in the cattle market segment later here, but yeah, it's just the time of year. We generally know the production side, the supply side, and demand is there, but we didn't get any daily export sales announcement this week. And the export sales report this morning was pretty poor all around. I think that led to us going lower in most of the grains other than the wheat complex today.
Yeah, that's a great point. The export sales. I knew it was going to be bad with the Christmas holiday, but it was really bad, Dwayne. So no support there. And you mentioned weather. Obviously, not really watching U.S. weather, although there are some things there I think we could think about in terms of we need moisture in many areas. It's still pretty dry, but South America is the weather talking point for the most part. Brazil's seen some pretty decent rains here the last week or so, and largely I think that's been the biggest weight on the soy complex here this week, hasn't it?
It sure is. The frustrating thing for me is I think I was kind of on the red side of the ledger last week, looking at Brazil's forecast, thinking that we had to go down and test the support levels that we tested this week, and it actually eventually broke today. But last week was the holiday week, right? The trade just didn't want to do anything. And I understand that. So yeah, Tuesday we come in here this week and we gap lower because it did rain. Didn't really rain that much more than was forecasted, Jesse. That's why I was a little disappointed we didn't even do it last week. But like I said, the real traders, I don't think were here. Well, when they came and we gapped lower, and then the technicians kind of got a hold of the soybean market too. And when you didn't go back to try to fill that gap right away, the bears gained control, and then we ran down, and then breaking that 1262 support in March soybeans today just accelerated the downward pressure here. And now I don't have a lot of support. I'm looking over at my charts here and just going, soybean look ugly. Now, the funny thing is this is happening. The markets are sliding, and we're finally getting rains in northern Brazil, just as all the private forecasters are coming out and actually slashing their production forecast. Reuters was out today, and they lowered their Brazil soybean forecast to 151.36 million metric ton. That's down from their 158. And I know a lot of people started at 160. So it is getting lower. I think some of these rains are too late to help, but it's still green on the radar screen, right, Jesse? And that just makes the market go down several times.
Well, and I know we've seen some of the different private estimates, of course, have been cutting Brazil's numbers. And, we get into this next January WASDE report, be interested to see if USDA makes any moves. But I largely wonder heading into this report here on the soybeans specifically, I feel like you mentioned some of the chart damage. I feel like this market going to probably be under some pressure here. I don't anticipate any short covering in soybeans ahead of this WASDE report coming up here next week, Dwayne.
Well, no, because short covering is usually to say the funds are like extremely long or extremely short, and they're trying to square up some of those positions, right? Well, actually, the funds right now, we're estimating, we'll find out here in the commitment of traders reports in an hour, but right now, I think the funds are about flat soybeans to short a little bit, which they rarely go short. So that's another story there. But, they're not leaning hard one way or the other. So I think you're right. There isn't going to be this short covering rally or sell off for the soybean market next week. I think the soybeans are disappointed. We stopped seeing daily export sales announcements. We haven't seen one since December 19th. Like we talked about earlier, exports were poor this morning. Marketing year low. Path of least resistance is lower, but let me go back to the whole funds are hardly ever short the market. And remember, maybe we get to next Friday here. Maybe we're going to look and see and get reminded that we're tight when it comes to soybeans. Our ending stock is tight. Believe it or not, there is some bullish news out there. Our crush capacity increased, Jesse, over this last year, built a couple more plants, right? We're crushing about 4% more year over year right now. If I would plug that into my spreadsheet, increases crush demand, ending stock would dip below 200 million bushels. That's how cheap do we dare get? Because the cheaper we get, we're going to have China come back in and buy some soybeans from us. So everything's bearish now, but all the news is always bearish at the lows too. And I'm not saying we're going to come spiking out of this right away, because of the chart doesn't have much support. But I guess when it comes to soybeans, Jesse, I think we could see some friendly news, or at least a friendly reminder next Friday that the situation is still tight here domestically.
That's a great point that you make with the tightness on that domestic balance sheet. I know with bean meal, bean oil too, haven't seen many deliveries against the January contracts here yet either. It just feels like this soy market is really quiet. And kind of just marking time until next Friday, Dwayne.
Yeah, and I'm glad you mentioned the product side of it. Soybean meal has been trending lower. With the increase in crush capacity comes the increase in crushing just soybeans for meal and oil, right? Well, we think we've got some good oil demand out there when it comes to the veg oil market and the biodiesel thing. But meal, it's not like we have a lot more hogs out there right now to feed. So meal is actually trending the wrong way. Domestically and globally, our supplies are growing. Therefore, the price needs to come down. And if soybean meal is headed down, it is really hard for raw soybeans to rally. So yeah, I just kind of very blah market right now. It's depressing because it seems like the holiday season was a full month last month that we couldn't get the trade to do anything. And now you and I are talking about a blah time of year for trading as well going on here. But don't they say don't sell a complacent or sleeping market? And that's kind of my thought on soybeans right now. I don't want to sell it down here, that's for sure.
Well, speaking of blah, corn is blah too, Dwayne. I mean, not a whole lot of movement in this corn market either. Rounded out the week a little bit weaker, but your thoughts with this corn picture heading into next week's report, what do you think? Where do things stand right now in terms of this corn market?
Well, a general summary of my thoughts on corn is I don't want to sell it at the lows. Now, that being said, I was saying that last month too, and right now that would be wrong because I could have sold it last month and we're a little bit lower here, but we are still the cheapest corn in the world. I do look for exports to actually pick up a little bit. Ethanol crush has been very good. I think the problem with the corn market is when we talk about the WASDE report coming up, right? The ending stocks there above 2 billion bushels. I can talk bullish and say that, maybe ethanol's up a little bit, maybe some export demand increases. Well, what am I going to do? Knock it down to 2.1 billion bushel? That's not a bullish, oh my God, we're going to run out of corn and we need to rally. So the funds are getting very comfortable being short the market. And when the contract comes to expiration, they're just going to roll to the next month and sell that. And guess what? There's a carry in the market. So whether they sell out 1 month or 2 months, they're either making 15 or 30 cents. They get a higher sold position than where they just got out at. Maybe what March just did, the March contract, pulled all the way down to 460 here, right? December went off the board about 453 at the close of that day. But the high of that day that December went off was 460. Maybe we just went down and filled that gap. But so that looks okay chart-wise. But let me revert back to what I was saying. These funds can make money by just staying short corn if our ending stocks are this big. They're just going to go out to the next contract month, let that come down to where this month expired off, and just continue to roll and make money. So that'll work until it doesn't. Another famous, line that I rant about here. we need a scare. Something has to happen. Probably doesn't happen until we get to the growing season here. So if you're holding a lot of old crop corn, which a lot of farmers are, I don't have that bullish story that sparks it. And I think there's a lot of guys that are talking the same way I am. Therefore, I think there was a lot of farmers selling here, Jesse, this week of like just kind of a give up sale. Just let it go then. No one's talking bullish. I think that pressured our markets as well.
We are joined today by Dwayne Bussey from Bolt Marketing. And Dwayne, let's talk a little more on this corn market. As you know, you brought up a great point, maybe kind of some give up sales and some farmers selling here this past week. Yeah. If I'm someone though that I had to move some corn here, I for cash flow purposes, whatever the reason is, I'm booking inputs for 24. Is there anything you would say that they could maybe do as far to give themselves a little bit of upside on that? Or we just make it straight cash sales here? I know everything's a little bit different, but I mean, what would you say if somebody's forced to move some corn here, but still wants some options?
Okay. Yeah. Let's just say you got to sell some corn just for cash. There's a lot of that going on now, right? I mean, you don't want a big line of credit right now with a higher interest rate. So I understand that. If you've got to move it, but you're not happy with the price, well, that's literally what us brokers are here for. One way to do it, and maybe the best way right now, is with call options. Options are fairly cheap right now because of what you mentioned when we first talked corn, the blow-off factor. We're just not moving. And when we're not moving, the volatility decreases and options get cheaper. So you can buy a call option, sell the grain, that puts a floor in the price, but you still have that upside, because the call option gives you the right, but not the obligation to buy a futures contract at a certain price. So if it rallies, then you want that right. If it doesn't, you're out your 10 cents, say you spent on a call option. That's probably a good way for the guys that don't need the cash and are calling in. I'm not recommending to sell here. And I know if I would have said sell 2 or 3 weeks ago, that would have been the right move, but I just hate selling at the lows when everyone's so bearish the corn market. But if you ask me to come up with a bullish story of why corn has to rally, it's going to be a short interview. I don't have anything right now. So it sounds a little silly. But I just don't like selling at lows. The mistake wasn't to sell last week if you didn't sell corn this summer. I mean, that was the mistake this summer. But I know we always got to be looking forward, of course, don't we?
Yeah, we always got to be looking forward. And speaking of that, looking ahead to 24, making any moves corn bean wise on 24 new crop here ahead of the WASDE report potentially, or are we waiting to see what the WASDE has to tell us first?
I'm not big on, if you didn't sell some last summer, I'm not big on selling it here. And just because of the seasonalities behind it, Jesse, right now, I play with a spreadsheet and we plant this many acres, and guess what? Everything's kind of perfect. Prevent plant acres aren't any worse than average. Maybe they're even lower. 2 million acres out of winter wheat. We add that in, and everyone's ending stock right now for the 24 crop is bearish, basically, because this is a perfect situation. Now, I'm actually a bear for 24, believe it or not, longer term. The reason I don't like selling a bunch right here, Jesse, is the seasonality that usually happens. Something happens. A weather scare, China starts buying and stockpiling, even corn from us. Something can happen. And if China would do that, just that simple thing, the funds that are short might go, oh, geez, I don't want to be short at these levels, even though there is a carry in the market. And Dwayne talked about bearish ending stocks. They get out of those positions, we rally. But let me summarize by saying those rallies are meant to be sold in 2024 because of those big ending stocks and our projections for those perfect year moving forward. But not now, Jesse.
All right. How about wheat? Let's round out the grain talk here. Wheat had a decent day on Friday, really a decent week overall. I know you brought up that winter storm earlier in the show. We're seeing some winter wheat countries going to get some decent moisture out of this. That's got to help out with some of that winter wheat crop that's generally looking pretty good. What's your thoughts in this wheat trade overall? What are some things we need to keep an eye on?
Yeah, going into the week, it was kind of a bearish outlook for wheat because of what you mentioned. We actually had rains recently, and the crop conditions, about once a month we come out with some crop conditions per state, and they all improve. The winter wheat crop's looking pretty good, isn't it? We reversed maybe yesterday on news that China might be out there buying some more Chicago wheat, and which is a fairly good staple when the market rallies. That's going to be the rumor we're going to hear, but it's usually often true. With the U.S. dollar dipping back to where it did, I think China probably did step in and buy some wheat. So hopefully we see some flash sales on Monday. Do I think we can just up and take off here, though? Sadly, no, because of what you mentioned. We got rain in the forecast next week. Now, there are some bitter cold temps that come afterwards, so maybe there'll be some talk of some winter kill here and there. But Jesse, we get that talk every year, and might rally the market here and there. But when the winter wheat's in good condition, I'm usually not worried about winter kill either. So, yeah, it was the bright spot today. But here, look at me talking down the one bright spot we had in grains. I just can't get that bullish about wheat here.
Well, that same winter storm is getting set to impact a lot of cattle country, a lot of feedlot country too. Let's move over to livestock. Cattle really largely had a pretty good week, especially Tuesday. We kicked it off with some good strength. I know cattle were down a little bit on Friday, and some of this cash activity is taking a while to develop here this week. But this winter storm, I got to think it's going to have some sort of impact here on this cattle market as we move into next week. What do you think, Dwayne?
I do too. I was really disappointed in the trade action on Friday. But if you watch it during the day, at one point feeders were up $2, and it felt like we were going to add in some winter weather premium into the cattle market. And then it gave it all back and then some. And kind of a chart-wise, not a good way to close the week with some key reversals in some individual contracts. But you're right, overall, it wasn't a bad week for cattle. In the fundamental sides, I mean, I'm hearing some cash as high as 175 now here as we're getting towards the end of the week. And that puts February at a pretty big discount to cash. And remember, February is usually at a premium. So I like the cattle market here. Sometimes, daily trade, the fact that it went down on Friday doesn't mean that's a new trend. It's just, somebody big was out there. Maybe it's packers selling the board, trying to get a little bit lower cash. I don't blame them. And on the feeder side, Jesse, I mean, the one-day index on Thursday was like, 233 or something. Well,
I think so.
That puts January $10 under that. So the cash market looks good. The one thing fundamentally that I would say is really bearish the cattle market is these weights. Good Lord. We bring them in as cattle, but we're taking them off as elephants. They're big. And that gives packers control. And surprise, surprise, more choice cutouts then, and then choice cutouts are lower this week. But if the storm gets nasty and the bitter cold afterwards, maybe that trims into the weights. I'm sure kind of hoping it does so we can get current again.
That's a good point you brought up as well with those weights and the fact, choice cuts have lost pretty decent amount here this week. I don't have the exact number in front of me, Dwayne, but it's been quite interesting. And I think, some of those packers have been a little bit slower to procure cattle this week because, they with fatter animals, they don't necessarily need it. At least that's what they're saying, and might just be a ploy, to try and work the market a little bit. But still, I mean, that's a great point you bring up here. It's going to be interesting to see if we can get this market current again here in short order or not.
Yeah. I remember we back up to a couple of interviews you and I had in December. I mean, we talked about the packers were buying cattle, but not picking them up right away. I mean, they needed the choice cattle, and they're also really smart about, if we can make them go on feed for a while, we'll have more production. Maybe we're just filling a hole here. I mean, the general numbers for North America overall are still tight. And I think feeders, you're going to see that in the upcoming cash sales. And I think we'll rebound out of this. And I don't know, we'll sit back and see what the weather storm is this weekend and what it's looking like next week. But that bitter cold's going to put a little dent in it too.
Yeah, I couldn't agree more. Hogs, hey, 2 days in a row, hogs in the green to round out the week. It's at least a nice sign, I would say, for our hog producer folks, because this market's just been dismal, trying to find some sort of support here, Dwayne.
It has been dismal, hasn't it? And I guess I really don't have a lot of good excuses of why it had to rally these last 2 days. And it's not like the export demand was great this morning either. China's economy is still a bit of a struggle. Our economy numbers this morning were fairly good. Maybe that's why we've rallied. But I guess for those hog producers we're talking to out there, maybe this is something to reward. If I don't have good excuses of why we're higher and we need to start this new upward trend, well, maybe this is a selling opportunity. You have a nice carry in the market, and production is still pretty high here in the U.S., and weights are high in the U.S. as well. So maybe consider that.
Definitely. And good stuff as always. Before we let you go, final thoughts, anything you want to reiterate for folks here as they're thinking about things working through the month of January?
Hey, it's depressing right now. I get that. maybe go back to the spreadsheets. And I think I say that quite often in our last segments, but I always like going back to spreadsheet. Are you making money or not? And that's really what this matters, right? And one day doesn't make a trend. January report will be huge. Maybe we can get some bullish news. Maybe we lose some acres, something like that. I think the yields are there, but let's get to the January report. And if we have to make some adjustments and get bearish, we will after that.
Dwayne, if folks want to reach out to you with questions and get some advice there at Bolt Marketing, how can they reach you?
Yeah, they can call us here directly, 605-448-2365, and they can check us out online at boltmarketingllc.com.
Dwayne Bussey with Bolt Marketing. Always good to chat with you, my friend. Have a great one, and we will talk to you again soon.
Sounds good. Thanks, Jesse.
That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.